Welcome back. After 2 days of negotiations, the U.S. and China have appeared to walk back from the brink of a damaging trade war. Donald Trump, in a Truth Social post, said a deal was done, but investors continue to wait for details. China is said to supply rare earths and magnets up front as part of that deal, but details are scarce. Let's talk now to an expert. David Oliver is public affairs strategist and founder at Minerva Strategy. David, thanks a lot for joining us.
Morning, Paul.
What is your sense on where things stand right now? Because details are very scant.
Yeah. It's interesting to see. We've had 2 days of negotiations in London. Apparently, they were negotiating for 20 hours. This follows on from the Geneva talks, which happened a couple of weeks ago. But all the signals were the Americans were pressing, Scott Bessent-led negotiations were pressing for the deal. And I was listening to Adam Posen this morning, who's obviously a famous economist who works for the Peace Institute, and he talks about this sense that the Chinese have what we would call escalation dominance, which is a security concept, but he's applying it to an economic sense. Mm-hmm. And in that case, the fact they have this control over rare earths, and the US have felt that pressure, has forced a deal which the Chinese have got against the Americans, you could say.
That's an interesting phrase, escalation dominance. Just flesh that out for us a bit.
Well, it's the sense that one party has the ability to control how a particular dispute is escalating.
Right.
And that they, therefore, in that sense, have the superiority in terms of the strength of position. And this is one of the really interesting things, and we talked a bit about this Wall Street Journal editorial that came out yesterday. Mm-hmm. That was mainly focusing on the fact that they don't believe that the Trump team has a strategy. And I think the biggest weakness that you would identify in the strategy of the US going into this is they haven't built up strength in areas which are now being exploited by their adversaries. And the one that the Chinese are exploiting are the rare earths. They have no rare earths built up. Mm-hmm. Nobody else in the rest of the world can produce or be able to process rare earths. China have 90% of the market, over 100% in some. Mm-hmm. The US Geological Survey has identified, I think, 10 of the 50 critical minerals that the US needs are 100% reliant on imports. Right. So they're not in a position of strength.
Yeah. And none of this was a surprise. All of this was known years ago in any discussion of rare earths. And yet Donald Trump and the U.S. administration walked right into this situation, dialing up tariffs on Chinese goods to nearly 150%.
Yeah, so those have come down to 30. Again, I think the Peace Institute said that actually the average is about 33%.
Right.
And the China tariffs on US goods have dropped down to 10%. But I think it's interesting to reflect what's happening this time round versus Trump 1. And Trump 1 arguably had more leverage. The rare earths issue was there. In fact, China used that quite significantly against Japan in a trade dispute in the early 2010s. They could have played that card in Trump 1, but they didn't because I guess in that sense, the US had a better position versus this concept of escalation dominance. This time round, one of the things that China, I think, didn't have last time round was the ability to control more of the chips that it now makes. And actually, the Biden era moves, the small yard, high fence concepts that was developed by Jake Sullivan, has meant that China has been able to diversify. And again, that point of leverage that perhaps Trump had 8 years ago, he perhaps doesn't have as much now. And so they've had to blink before China has.
So this isn't over. How is this going to play out in months ahead?
So, the biggest headline that came out of the deal was the fact that China have announced, I think they didn't quite use this phrase, but we'll use it, a 6-month moratorium, which essentially means that they will now re-export the rare earths. But there's two things with that. One, they were very clear, or it's been made very clear that US companies, and actually it's not just the US, it's other markets as well, won't be able to stockpile. So they're cute enough to know that there's no point allowing 6 months for countries to build up inventory so they don't have more strength. And that 6-month notion itself implies that we're going to come back to this at least by the end of the year, probably before that, because, of course, we had these talks in London after Geneva talks because faith broke down in terms of the actions that we saw between the Geneva talks and the London talks.
What role is there for Canada here in this discussion of rare earths and critical minerals, which are similar but different?
The untapped potential. So, this is the big conversation I think we're now having in Canada. Canada has the potential to be a critical minerals and rare earth elements. We have to, without going into too much technical detail, those are obviously two different things. Yeah. But Canada has the potential to become both a producer market and a processing market for both of those. The question is going to be how we're going to do that. And these are long-term trajectories.
Right.
You know, Mark Carney pledged, I think, during the election campaign to speed up permitting to 2 years. I think we're waiting for that legislation to actually come in. 2 years? You know, 2 years is eons compared to what's going on at the moment. And,
Right.
and is it really 2 years? It's probably a lot longer.
Right, but 2 years is vastly shorter, I think mining executives would tell you, than the period of time it has taken in the recent past in this country to get a mine approved.
Absolutely, but building a mine, it takes a lot longer than 2 years, and China has taken 20 to 30 years to build up its dominance of critical minerals and rare earths, and that's a command economy that can pretty much, you know, a government that can basically do what it wants. We're not quite in that situation, so you know, this is a pivot to the US approach would be to start talking to its allies and thinking about what a longer-term strategy is for this, as opposed to perhaps some of the actions that we're seeing at the moment.
Okay, remind us of the current state of Canada-China trade relations.
We had at the end of last year, we had several restrictions came in, particularly on EVs. I think there was 100% tariff on Chinese-made EVs. Canada is very wary of the same commodity dumping that other markets have experienced with China, so particularly around steel and aluminium. But I don't believe there's been anything new this year. China has retaliated, I think, with restrictions on soy, pork, canola. Actually, forgive me, was I think one of the big retaliatory measures. We haven't seen anything more in 2025 after China's response in March. And I think that Mark Carney's government is probably picking a careful line between focusing on the potential renegotiation of CUSMA next year and the moves that are going on after the big steel and aluminium hike to 50% a couple of weeks ago. And I think with China, it's really a bit of a steady as she goes strategy. Canada is going to be very wary of doing anything particularly with the Chinese, particularly given the climate with the US at the moment.